Hi, everyone. For those who just logged on, my name is Dominique, and I have the rest of the Greenleaf team here with us today. And today we'll be discussing a new deal, Carter Oak Flex, located in the Atlanta metro area. But first and foremost, and as always, we like to remind our viewers and participants of what Greenleaf Connect is and what our mission here is really directed towards. Our mission is to be informative and really ultimately provide transparency to all of our audience members, including investors, team members, and anybody throughout the broader public. Private Connect events are more really small to large interactive virtual events. These are for live meetings, group discussions, training sessions, company strategy, and live streams are really open to the public and targeted for new deal launches, like this one, quarterly updates, things of that nature. So before we start, we always like to provide some rules of engagement for this afternoon. First, you do have the option to change your presentation view. You can click and drag on the slider located on your screen to make the presentation bigger or smaller, or you can change your view to speaker spotlight view. There will be a Q&A session at the very end of this broadcast. We kindly ask for you to use the Q&A feature located at the bottom of your screen, and that is how we will facilitate the communication and discussion moving forward. Lastly, this live stream is recorded and will be sent to you via email by the end of the week this week. All right, so we just went over those rules of engagement. Today, we will not only discuss the Carter Oak opportunity, we'll do a review of the capital stack here. We do have a combination of fresh equity and 1031 for this opportunity, and then we'll break out into that Q&A session at the very end. All right, without further ado, I will pass it over to our panelists, Dave and Abhi. Thanks, everyone.
Great. All right. Thank you very much, Dominique. Welcome, everyone. Abhi and I are excited to be talking about this Carter Oaks deal, but warehousing in general, this has kind of been a touch point really all over the country. And a lot of what we've seen right now is just rising rents in the warehouse space. And specifically the deals we're looking at, there are just not a lot of supply of single story flex space that is out there. So we're seeing great demand across the market in that. And, it's something that we're very much working on right now. So, yeah. So Carter Oaks, this deal, we have it under contract for $5.5 million. Mm-hmm. We're very excited about it. It's in Norcross. It's right down the street from where Abhi and I are sitting right now. Dominique and Natalie are remote today in different locations, but for Abhi and I, this deal is only a couple minutes away from where we're currently sitting.
True.
And we're getting it for $100 a square foot.
Yeah. It's like Dave said, it's in Norcross, part of Atlanta MSA. It's 1985 built, single story brick exterior, approximately 54,000 square foot. It has 14 units right now, 10 tenants, 85% occupied, and we're buying it for $101 per square foot.
And so we're happy with our price per square foot. It is not fully occupied, and that's why you kind of see this lower cap rate of 4.4% in year one. That's because for us, this is a value add opportunity. It is not very well occupied, and the rates are pretty low. So we're looking at this on a price per square foot, whereas cash flow going in isn't great, and we're going to build on that as we proceed with the deal. So we mentioned it's close to us. We've done a lot of deals in Atlanta over the years. And, Norcross, where Abhi and I are right now, is Northeast Atlanta. And you can see all the other green leafs that are on the screen here, everything we've done in the past, all the way down to all the stuff that's in downtown Atlanta to up in Duluth and right where we're at here. So we're obviously very familiar with this location. We're right off of 85. You can see the highway sign there. The 85 is the main highway that's going between Atlanta and Charlotte. So we're always optimistic to buy things off that highway, and especially close to Atlanta too. Yeah. When we look at other deals that have sold in this submarket, it kind of gets really condensed, and we start looking at deals that are, within only a few miles of this actual deal. So you can see we've got 5 other opportunities that are up here with Carter Oaks. we're going in at 54,000 square feet for $100 a square feet, but these other ones are mostly, they're all more than this going in.
Yeah. Yeah, I mean, on average, others were traded for 130, but then with, after conversion, we will be around market when all said and done.
All said, yeah. So once we do our improvements, we'll be right around 130 a square foot as well.
Correct.
Right.
Yeah, and if you look at the pictures there, you'll see our comms are very similar to how our building looks. Single story, a good entrance in the front, dock height, drive-in doors in the back, and similar size, similar build. And all of these transactions were 6 to 8 months old too.
Yeah, and you can see we've got some deals like deals 2 and 5 that look the same there. It's the same kind of complex, same layouts, just different buildings in the same place. So, and these are all, you can see all these dates. These are all in the past couple months.
Exactly.
So this just confirms we do like the price point that we're getting this at on a price per square foot. And then, for example, the one that's deal number 1 there, that one sold at a 4.5 cap when it was fully leased. We're not fully leased, but if we do fully lease this up, which we plan to do, and then a 4.5 cap exit is aggressive. We're not going to assume that aggressive, but that's definitely a success exiting at something at a 4.5 cap like that. So from a lease rate, so these are what the sales are, right? So we're looking at buying at 100 with other stuff in the market around 130. And this is where we really see some additional value in this deal is the lease comparables.
Exactly. Yeah, I mean, if you look at the table there, again, recent leasing activities, similar size, similar looking buildings, and currently our building is collecting $9.50, and all of our comms are, almost $10, $11, $13. And if you look at the first 2 comps there, Unity Drive, we actually offered on that property. We didn't get it, but we went and toured, and they were executing the same business plan that we are for this one, converting from office to flex. And mid last year, they were getting $12.30. And the owner is one of our friend, Greenleaf's investor too. Now he's pushing $15 and he's getting it. So we have 30 to 40% upside in our rent.
Yeah. And our rent right now is full service. So when we say $9.50 plus, currently the current structure is the owner is doing all the maintenance and all the costs. Whereas moving to a structure where it's the tenant's paying their rent, and then all the costs and expenses are then billed back to the tenant through what's we have listed as CAM here, which is common area maintenance. So that charge that goes back is really passing through the operational cost of the property to the other tenants that are there. And you can see the majority of these, 2 of these, we couldn't get precise information on that, but the rest of these all have a CAM bill back into their rent, which this currently does not have and will have as we go through our lease up process on this asset. And that map down below there, again, just like the sales, these are all really, really close to this location. We're talking within a couple minutes of driving distance. So we think they're very good comps to prove that our leases here are 30 to 40% below what we can get.
Exactly.
So when we think about the investment as a whole, right? So we mentioned we're under contract for $5.5 million. We are going to do renovations here. We're going to make some substantial improvements, and we're going to re-tenant a large portion of this asset. So you can see that brings our total deal cost to just over $7.5 million, and then $2.9 million in equity. And then we have our 1031 that's coming in fresh equity. So we have 25% of this deal, which is a rollover from our Hillcrest 1031. So Hillcrest was our 17th deal out in Spartanburg, South Carolina. We recently sold that one. And part of that 1031 is moving into this investment in purchasing this asset, whereas 75% of the cash for this is going to be fresh equity to make up the difference there. 2 of the parts we like talking about are this: what does it look like in year 1, and what does it look like in year 5? Right. So year 1, we're coming out of the gates with an occupied property, although the lease's average term is kind of month to month and less than a year. And then we're going to execute our plan on it. So you can see our first year, we're going in cash flow positive, but we're going to be doing a lot of CapEx during that time.
Yeah, I mean, the 1 year lease term is what will allow us to execute our, conversion plan.
Yeah, if the lease terms were too long,
Yeah,
we wouldn't be able to do the renovations in time
exactly.
and get our rents that we need.
Exactly. And like Dave said, year one NOI compared to year 5, that's almost 250,000 difference. That's what's going to create value at exit at then market cap.
Yeah. And Avi mentioned, like, going in, we've got 10 tenants there of 14 units, and only one of those tenants is going to stay.
Correct.
Right. So if we can go into our CapEx strategy, and this is really saying, like, hey, we're going to go spend $1.6 million, and what are we going to spend it on?
Yeah, majority of that is going to be conversion from office to flex, almost $1 million, and then the rest are going to be, parking lots, SVACs, making it better, leasing up. But then the conversion is going to have demolition, plumbing, electrical, adding toilets if needed, making the office look better. So, it's a lot of work, but then we are, fully capitalized for all the expenses.
And our conversion that we're talking about doing here is having, when you walk in the front door of one of the units, right, of the 14 units, there's going to be about 20% that's either meeting, office, bathroom kind of areas.
Yeah.
And then the back area, you can see in the picture here, is just fully open. So a lot of the work we're doing is ensuring that the back areas of each suite, they have a roll-up door that goes out there. They have a big access door in the back. And then it's really floor to ceiling is open as much as possible for storage and warehousing. And that's, it looks like it's an unfinished room, but that is the goal, is to get it to look like that. So, and you can see we have a floor plan to the left of that here too, which is basically like you're walking into an area, you've got 4 offices,
4 rooms,
and then the
yeah.
rest of it is all open.
Yep.
And our CapEx plan, it does include all of our contingencies on this as well. And it also has where it says upfront LC, that second line, that is our leasing commissions. That we're putting that into the CapEx plan as well. Anytime we do these and we have to go re-tenant it, we are working with local brokers to lease that space.
Yep.
So we're going to have some of their commissions that are coming in here as well. And that's that roughly $110,000 that is there too. So if we think about we mentioned, there are 14 suites and some are staying. This is the layout of the building. It's basically a giant U that I guess is sideways.
Yeah.
But in the center of the U, that's where basically your flex access points are.
Yeah.
Everything on the outside is a normal. You would look at it and say, okay, this is obviously the door where I enter this suite. And on the back side, that's where all the access points are. Tell us about this, the group that's in green here. These people that's occupied right now and they're staying.
Yeah, so there's a adult daycare, and they just redid their space. It's almost 17,000 square foot. Looks really nice. So we're not touching that because they're paying the highest rent as well. Everything else, every units in orange are going to get converted from heavy office use to flex.
Yeah, and some of these suites are currently not, they're not occupied as well.
Yeah.
So that's more just demoing that space to get to what we want on the flex side. But yeah, everything in orange, that's where the bulk of this CapEx work is going to be.
Correct.
So we're going to have this cash flow situation where we're going in with some tenants. We're also keeping some we know long-term, and then we're going to do renovations and lease them back up. So in that process, we plan to maintain our cash flow throughout the deal, mainly that large base tenant with 17,000 square feet, like that really helps as we do these projects to ensure that we have that level of occupancy. But going in, one of the lines we really like looking at here is a typical cash flow per $100,000 invested. And that starts out at around 7%. And then we're going up to 10, 12% as we've turned and leased these units. And right now we're baking about 7 months total. Right, so we're saying it's going to take 7 months total from when a current tenant leaves to having a new one that's paying rent.
Yeah, including all the demo conversion work.
Yeah. And we're going to do each one of those demos by individual suite.
Exactly. So the whole building is not going to get vacant at the same time. It's going to get scattered based on when the tenants, move out.
Yeah. And that's all really within the first 18 months.
Correct. Yep.
So everything happens in the first 18 months. But that green tenant that we saw back there, the adult daycare was 17,000 square feet. They're staying put the whole time.
Exactly.
So the other part we're looking at here, when we were looking at the sales comparables, there were some that had exited at a 4.5 cap for a fully leased building. Our projected cap rates here, 4.5 is a little aggressive for us to assume. We're assuming we're just exiting at a 6.5 cap. And that gives us a deal IRR of about 16%. It's almost a 2x multiple. And along that way, we start with our going in cap rate on a quasi vacant building that we're going to renovate at 4.5%, and we'll be up to an 8 cap in year 5 when we own it.
Yeah, I mean, 6.5 is current cap rates. So we're not making any expansion or compression. We would be happy to exit at 4.5 if we can.
If someone offered 4, that's kind of what happened on the Hillcrest one. It was like, okay,
Exactly.
it's a good deal.
Take it. Yeah.
So, okay. So with that being said, we're going to jump into Q&A. I know we had a couple things that came through, and Dominique is going to go over what the schedule looks like for this deal as we aim to close this thing here shortly.
Yes, thank you, Dave and Avi, for sharing those insights with us on Carter Oak Flex. This is a friendly reminder that we shared for our Fresh Equity Group. We shared your subscription package with you last Friday on the 7th, and we're asking for that subscription package to be due by the 26th. By the end of the week this week, you should receive the electronic funding instructions via our investor relations team via email, and we ask for those to be due by the 26th as well, all to prepare for closing on February 1st. All right, I will bring and ask Natalie to come back on the screen for us as we dive into Q&A.
Thank you, Dominique, and thank you to everyone who submitted questions. We also want to remind you that you can continue to use the Q&A feature at the bottom of your screen to submit questions as we work through those that have come in so far. So our first question for you guys, we have some new investors on the call. So could you tell the group what we currently own in the industrial warehouse asset class?
Yeah, so we've closed 2 deals really in the past 3 months that are directly similar to this deal, and that's Covington Flex and Kennesaw Flex.
Yeah.
And Kennesaw has some renovation and repair work that's going on with it, whereas Covington was more stable and ready to go. Both of those are in Atlanta. Generally speaking, Metro Atlanta, outside of Atlanta. But those are the other 2 specific industrial flex. And then we have 2 more we have 2 more under contract.
We have 2 on contract, and there are a few more in the pipeline.
Yeah,
for the coming months.
So in total, so with Carter Oaks, we'll have about 130,000 square feet of flex space.
Correct.
Great. Our next question is, can you review the current tenant makeup with us again?
So the most important thing with the current tenants is really the adult daycare center. Yep. That's the only one that is staying. So the other ones are, and they're really just a mix of.
Yeah, I mean, small businesses. We have software company, we have a church, we have a counseling center, we had an IT guy, we had a designer. So it's a diverse group of small businesses.
Yeah. So, but they're all, as their leases come up, they're going to vacate.
Yeah.
But the adult daycare center, the 17,000 square feet, will stay.
So who are the target companies that would fit this space post renovation?
So I mean, that's a good question. We're looking for, if you can imagine, a business that needs to have that big flex space in the back, but also the office in the front. And a lot of that is local distribution and local services that are starting out of one location. So whether that's something like an HVAC company or any kind of warehousing and distribution where they've got to receive stuff, manage that, and then send it back out. These are not necessarily storage businesses. So this wouldn't be like a part storage location. This is all, you've got high inventory turnover from tenants, and then they're moving stuff in and out on a regular basis.
Yeah, we have labs in some of our other buildings too, you know, like testings, environmental testings.
Yeah.
So basically, flexible, it's flexible because it allows various office and warehouse uses. So, I mean, there are so many diverse group of people who would rent this kind of space.
Yeah, but it's not that we're saying, hey, it's going to be exactly all HVAC companies or all specific. It's going to be a mix of different businesses that are in there,
Correct.
but all around a service level business.
And it's better. That's why we like it, because it's, it makes us resilient to any, economic event for any businesses. Yeah.
So speaking of future tenants, can the structure handle overhead hoist loads?
I can take it.
Yeah.
That term is relevant for light heavy manufacturing tenants, which are not our target tenant pool. So it's irrelevant to our space right now. But eventually, if we have a big box or big warehouse where we will be targeting those manufacturing and people who will be using those kind of machines, then we would care about the load, the overhead hoist loads.
Yeah, most of our stuff is going to be either a small forklift or just a ground pallet forklift that's moving around on the floors.
Okay. Well, what about the power loads? What are going to be available to tenants?
This one has a 3-phase 200 amp 220 600 volt, which is pretty standard for any light industrial zoned flex space.
So that's suitable and good.
Oh yeah, it's well suited for any of the tenants we have or we will be going after.
Great. Well, our last question is, can you tell us more about the construction time frame, the cost, and those details?
Yeah, so our target is about 18 months. And granted, that involves us, one, taking over, and then each tenant that has a suite leaving. We're projecting that they're currently leaving when their lease expires. It normally doesn't work out perfectly. So there's some early or some overlap to that. And then we have the 7-month time frame to do our construction, which is really the demo that Abby talked about. Like, we're going to remove that back section, ensure that it's as open as can be. And then even when we're doing that, though, we're going to be leasing the whole time, so that hopefully one suite, we're able to turn it and then have someone be moving in within that 7-month period. So all in all, we believe we can do all the suites in the 18-month time frame for that.
Great. Well, those are
So
all
I
the
wonder
questions.
if that fully answers the question, because it's mostly demo and then leasing time frame and showing that we have built in there for 18 months.
Okay, well, those are all the questions we have for you guys today. Again, we want to thank everyone for participating. And of course, we want to thank Dave and Abby for sharing the details of our new Carter Oak Flex deal. As we wrap this up, we'll pitch this back over to Dominique to close with our upcoming dates.
Thank you, Natalie. Again, before we log off, we always like to share the Greenleaf Connect schedule up and coming for the remainder of January. So we just reviewed Carter Oak Flex. We do have a Oak Hollow sale update for Deal 50 investors loaded and upcoming for Oak Hollow investors. So stay tuned for that. And we are closing 4Q 2021. So investors can expect their end of quarter reports along with property overview videos by the 21st of January. And then right after that, we will do our commercial and residential review live streams, currently scheduled for the 25th at 11 a.m. and 2 p.m. Eastern time. All right, that concludes our broadcast. Thank you so much for joining us today. Don't forget to check out our Greenleaf Connect YouTube channel for all of our recorded live streams, with this recording being made available by the end of the week this week. We certainly appreciate you joining us today, and we look forward to having you on our upcoming live streams. Thanks again, and enjoy your day. Bye, everyone.
All right, thanks,
Thank you.
everyone. See you later.
Bye.